So today I'm going to teach you how to buy Dogecoin on Coinbase. Who's excited? I'm just kidding. So we went off the gold standard 50 years ago, and this is what's happening to the money supply. It's just infinitely being printed, and this will show you exactly how much it is. If you look down here, the M2 money supply was at 4.9 trillion in 2000. Now it's 2021, it's at 21 trillion. So we're at like a 4 or 5x on the increase in at least the US dollar. So inflation is too much money chasing too few of goods or services. The problem is it's measured in the CPI. What people don't understand is why there's inflation, really why they print money. Part of the reason why they print money is to devalue the debt, right? If you go back, we actually just hit 29 trillion. That's really exciting. That's a milestone we should all celebrate, 29 trillion in debt. And they print money to actually devalue the debt. Meanwhile, it hurts people that are not putting their wealth into assets that exceed the rate of inflation. So this is some of the things in the CPI, right? It's a museum ticket, it's milk, and it's funerals, right? So should we be measuring inflation by museum tickets? Who has bought a museum ticket in the past decade? Anyone? 1, 2, okay. More than I thought, honestly. I've never bought one, so you guys are maybe ahead of the curve here. But if we look at actual data, just 1 year ago, 87.7% inflation on car and truck rentals, used cars, 45%, gasoline, 45%, fuel oil, 44%, housing is up 24%. I know real estate investors. Who's a real estate investor in here? Quite a lot. Awesome. Probably about 30 people. So you guys are well aware of the 24% increase. So the reason why I'm just showing you this is I think inflation should really be more measured on what we all need, right? I don't need a museum ticket, but we all need a roof over our head. So maybe we should start to look at it like this. And if we were to say, well, if inflation is 24%, let's say it's not even 24%, let's say it's 20%, okay? And no one truly knows, and I don't think anyone will truly ever know what the true rate of inflation is, because it depends what you're looking at. It's all about too much money chasing too few of goods or services, right? So if it's, let's say it's 20%, now the question is, how can I outpace inflation to protect my wealth and have the highest expected return? Well, let's look at some assets that can help us do that. We'll look at the major indexes, right? The only ones that have kept up with over 20% is the NASDAQ 100 and then Bitcoin. Who can read that percentage return in Bitcoin up in the top right, the cumulative percentage? Does anyone know what that is? Is that like a really foreign number there? It's 20 million %. 20 million %, not too shabby. But on an annualized basis, we're at 230%. Right? So it has far exceeded the rate of inflation, but people get really worried about volatility and they associate volatility with risk, and those two things are actually quite separate. But who understands Bitcoin and how it has a limited supply? Does everyone understand that? A few people, really not too many. Okay, so Bitcoin is limited to 21 million. We're right under 19 million right now. And what happens is every 4 years, it's actually a little bit less than 4 years, the supply gets cut in half. So it's disinflationary. So over time, the supply gets slowed until year about 2140, when we're going to be at 21 million coins. Okay, so what buying Bitcoin is actually taxed as property today. That's how the IRS is classifying Bitcoin, is property, right? So what you're doing is you're buying property in cyberspace. It's not like this random coin that's useless. The utility right now is actually a store of value, and we're going to talk about how that's even transitioning. But it's up 75 million % in the last 4,102 days, and now it's starting to be used as a currency. And who can name the guy in the top right-hand corner and then the guy right beneath him? Who's the guy in the top right-hand corner? Okay, who's beneath him? Stanley Druckenmiller, one of the most successful hedge fund managers of all time. We got Ray Dalio saying that it is prudent to put 1%, at least in Bitcoin. And actually, if you put 5% of your portfolio in Bitcoin in a regular 60-40 portfolio, it has more than doubled the return over a 10-year period of time, and it actually decreased the volatility. And then we have Jim Cramer. I usually just do the inverse of Jim Cramer, and it works very, very well. Kevin O'Leary, he started a company called WonderFi, right? So it's actually it's like a platform where retail can get paid interest, but he's using DeFi, specifically stable coins, to actually yield some type of return. Then we've got Square, BlackRock, Harvard, Yale, and Brown are using it in their endowments. Now, actually, they have been, and people just weren't even aware of that. MicroStrategy, who knows who owns MicroStrategy? Does anyone know? Michael Saylor, yeah. So if you guys want to understand Bitcoin on a deeper level than what I'm even talking about, go just type in Michael Saylor on YouTube, and he will blow your mind in 12 minutes. What he did, this was the revolution that happened. He was looking around. He owns this public company called MicroStrategy, $500 million in cash. And he's like, well, what can I do with the $500 million, right? Because this is just after the pandemic. They're printing money. Okay, what can I do with my money to try to protect it? And he looked at bonds and stocks and every asset, and he analyzed each of them, and he said, actually, Bitcoin is the best place. So he put all $500 million in there, and now he's raised billions and billions of dollars through bonds. And now he has $7 billion in Bitcoin, and it's in a public company, and now people are even buying MicroStrategy stock because they want exposure to Bitcoin. So he created this huge revolution, and he was the one that actually talked to Elon Musk at Tesla. They got Tesla to put it on their balance sheet. And now we're starting to see real public companies with real money actually buying it as a store of value. And this flag right here, next to US Bank just launched custodianship over Bitcoin like 3 months ago. El Salvador is actually using it as a currency now. And if you guys like understand, well, who knows what the Lightning Network is? We got like two people, one of them's Austin. So I'll show you a chart at the end and how the Lightning Network is changing Bitcoin, but it's used as a currency in El Salvador. So there's more people in El Salvador that have Bitcoin wallets than they do have bank accounts. It's like exploded. And now if you move there and you have Bitcoin, it's not even taxed, right? Because it's used as a currency. And now all these other countries like Brazil and Mexico and 4 other countries are starting to consider using Bitcoin, which is it's going to be tens and tens of trillions of dollars coming into it, which is very exciting. And the question is, are we too late? Let's say it's not even a currency. Let's say that never works out and it's just a store of value. Well, the store of value market is estimated to be about 150 trillion, and Bitcoin has about 0.7% of that. So you don't look at the price of Bitcoin and say, oh my gosh, it's 50 grand. Right? I saw it when it was 5 grand 5 years ago. I'm not buying that. That's stupid. You look at it at its market cap, and then you can have an idea, well, what's Bitcoin's market cap relative to what sector it's actually in? And then you can have an idea of how that's going to grow over time. Right? Even if it went to where gold was at, it's more than a 10x from where the price is at. It's going to put around $500,000 per Bitcoin, and it's better than gold in every other way. So I always like to go back to principles, what makes a successful investor successful, and it's awareness, right? So being able to identify trends and new demands in the economy, and then be able to have the courage to actually put capital in the place before all the masses do. What I want to help you guys understand is blockchain. Who could actually give me like a 1-sentence explainer of what blockchain is? No one. Uh-oh. All right, well, that's why you guys are here. A system in which a record of transactions, data are maintained and stored across several computers that are linked in a peer-to-peer network. So essentially what it is, it's an open accounting book that just records data and transactions. Now, there's 2 value adds of Bitcoin and cryptocurrencies in general. It's blockchain, right? And then it's cryptography. So we're going to figure out what cryptography is. It's a process of converting ordinary plain text into unintelligible text and vice versa. It is a method of storing and transmitting data in particular form so that only those for whom it is intended can read and process it. So what is the value of cryptocurrency? Because cryptocurrency runs on the blockchain, the value is derived from the efficient, unbiased, secure, and unhackable transmission of data and value that allows central powers to be removed from the process. This reduces fees, collapses time, limits corruption, and makes markets more efficient. So that could be a little bit of value. And I'm going to help you kind of understand the value, let's figure out how it works, and then we're going to look at some sectors that it could likely revolutionized. What happens is, let's say it's like we're talking about Bitcoin here, right? Someone requests a transaction. The requested transaction is broadcast on a peer-to-peer network consisting of computers. If you hear the word nodes, that's what they mean by that. It's just really computers. The network of nodes validates the transactions and the user's status using known algorithms. A verified transaction can involve a cryptocurrency, contracts, records, any type of data. Okay, once it's verified, it's combined with other transactions to create a block. So that's what block is. A block is just a block of a bunch of transactions together, and then that's hashed together into the next block. Right? So blockchain is just a block of transactions and data that are blocked together, and they're hashed onto each different block. And then that it'll be verified, and you guys probably hear people mining for Bitcoin. What they're doing, these miners, all they're doing is solving complex mathematical equations and verifying the transactions on the blockchain. So when I send Bitcoin from myself to Austin, that's what's happening is the miners are actually verifying the transactions and validating them, and then they get rewarded in Bitcoin. Right? So that's what mining Bitcoin is. It's just verifying the data. And the more people that are mining, the stronger the network gets. And Bitcoin has the strongest computing network in the history of the world because of the amount of people mining for it. So the potential applications, quite a few things. I mean, we could look at the automotive industry. Consumers can use the blockchain to manage fractional ownership of autonomous cars. Financial services, faster, cheaper settlements could shave billions of dollars from transaction costs. Actually, banks in the United States, they make $30 billion from just monthly banking fees and people withdrawing too much money out of their accounts. The people that really can't afford it, they get taxed with a $130 fee. So there's already platforms, okay? This is called DeFi. You can go onto decentralized exchanges such as Avi or SushiSwap. There's dozens and dozens of them, if not. There's probably even hundreds. But what we can do is we can all upload liquidity and we can all become the own bank, right? So us collectively can upload liquidity. We provide liquidity on this decentralized exchange. And meanwhile, we don't have to pay for the building and the 11-year-old fax machines and all the employees and all the nonsense that goes along with running a business. And what happens is all the fees, instead of going to the bank, they're going to the people that provide the liquidity. And that's already happening. And that actually started to blow up in August of 2020. So it's, whether you believe it or not, it's already here. Voting, who would have liked to seen some transparency on the last election? All these voting ballots, I know a lot of dead people that voted. I guess I don't know them, but I heard about them. And what would be helpful is to start running our voting systems on the blockchain, because what blockchain is it's transparency. And we need more transparency in the world and in industries, and it's much more scalable. And then healthcare as well. Like patients, it can be encrypted data, right, that can be shared with different networks of healthcare providers without the risk of privacy breaches. Blockchain is incredibly powerful from a privacy standpoint. Who can tell me what Web 3 is? I know we got some Web 3 people in here. I talked to two of them. Metaverse? Who can go like a little deeper into, I mean, yeah, it's a form of Web 3, but who could describe what Web 3 is? Yeah, exactly. That's the best response. There's the decentralized internet, right? So I'll show you a few examples. With social networks, you can monetize your own personal data and content. For example, let's say that I produce a video. I can make the video an NFT, like a non-fungible token, and I can be paid for the amount of times that my video is viewed. Same thing with artists. Okay, they can actually monetize the copyrights through NFTs in their albums. That's already happening right now. So there's different artists actually building their music on a blockchain and being paid, and they're removing the central power that takes all the fees from them. And also, it's much easier for them to like scale and grow as an artist. Event planners, this is something we're doing. I own a consulting company as well, and some of our events, we give our members NFTs. So what an NFT is just a non-fungible token. It's essentially digital property, which they use the NFT to get into our event, right? And you can verify that on the blockchain. So we know that like these tickets aren't being duplicated. This is also from Goldman Sachs as well. They're actually going heavily into a trading desk and taking crypto very, very seriously. Browsers as well. This is already happening. Example is the Brave browser. I use that once I found out what Google does with our data. I moved to the Brave browser. So all this stuff is already happening, and we're actually not even the first inning. It's a really, really, really big deal what's happening with Web3. Believe it or not, central banks are creating their own digital currencies. So they're called CBDCs. And they have already confirmed, and actually countries have already launched them, and the United States is also launching their own CBDC. And it's, who knows if it's going to be run on a public blockchain? I would assume that probably not, because it doesn't really incentivize them, and I can't imagine they would want to show everyone how much we're printing now, CBDCs. But this is happening whether you like it or not. So all of us are going to start to have digital money on our own. We're not going to be carrying around credit cards and fiat currency anymore. It's going to be run on a blockchain, and you're going to be using your phone to pay for literally everything through a blockchain and through the use of cryptocurrencies. So I hope this is what you guys are starting to look like a little bit, starting to comprehend how big this actually is. My goal today was to wake some people up, and I'm going to show you some really cool stats on blockchain so you can kind of look from an investor standpoint. And also I'm going to talk a little bit about altcoins so you can, because I know a lot of people are like, well, what is the intrinsic value? I can't feel it, right? A lot of real estate investors, they want to go touch a brick to understand what they just bought. You can't do that with crypto. So I'm going to help you understand that here in a second. But the point of this is everything is going to be tokenized and digitized. This is where the entire world is moving. So if you guys, I know a lot of people may be like, that's dumb, this metaverse stuff is not real. It's actually happening, and it's going to happen whether you like it or not. So it's completely up to you on if you want to take advantage of it or if you want to fall behind and be the blockbuster while Netflix just trumps them, right? And that's exactly what's going to happen in the investment world. And by the way, we're not even in the first inning either. This entire space has just blown up. DeFi really just started to become a thing in August 2020, and then we've seen NFTs launch after that, and then we've seen more Web 3.0, and then we've moved into all the yield farming stuff, and the sectors. There's so many sectors within crypto. It's pretty unbelievable, and it's crazy how fast the space is growing. And in the last 12 months, the entire industry has changed. And here's how I heard this from another guy named Brock Pierce. I was with him last week at a family office event in Miami. We're at let's just say, before Christ, right? You've got after death, then you've got after gold, and now you've got after blockchain. This is how big of a deal it's going to be. The entire world is going to be run on blockchain, and because it brings transparency and allows the entire world to scale. So it's this is something we could look back on and be like, wow, this was the date when blockchain came out, and this was the date when the entire world started to actually change. So I'm going to show you some on-chain metrics. Who can tell me what on-chain metrics is? Anyone have any idea? Well, I would assume it's a metric on a chain. That is exactly right. Yep. What it is we have softwares in our fund that we can analyze and look at different data on blockchain, right? To try to have an idea of what to invest in. This is the exchange net position change. Okay, so this is just Bitcoin as an asset, right? So what we want to know is Bitcoin moving on or off of exchanges? Because you can hold Bitcoin and hold your own custody on a cold wallet. So it's essentially like a thumb drive. So you're holding it offline, right? It's really the safer place to store your Bitcoin, especially long term. But you would move it there because you don't want to sell it. You want to hold on to it. So the green is people moving Bitcoin onto exchanges, okay? And if you look at the year to have some context, this is 2012. You see a ton of green all the way up until about the last year and a half. And then we see a lot of red. And if you look at when the green happens, right, this is when, obviously, this is the price. So when price goes up, you see a lot of Bitcoin flow onto exchanges. And why is it flowing onto exchanges? To be sold, right? People are realizing profit. And what's been really cool to see is earlier this year, we obviously had a big sell-off in April and May, and you see a lot of green during that time period. But over the last year and a half, we've seen a ridiculous amount of red, which is people just moving Bitcoin off of exchanges into cold wallets where it cannot be sold. And that just shows they have conviction that the price is likely going to go up, and that's why they're holding it in a place that it cannot be sold. So this has started to happen over the last year and a half, where people are moving it because they understand what I just talked about, how it's a store of value, what its use case is. Oh my God, it's being used as an actual currency in countries now. And people are starting to store it in places where it can't be sold. And this is some of the things that we look at when making shorter term decisions, if we see a really large inflow of Bitcoin onto exchanges, we know likely it's going to be sold, right? Why else would they be moving Bitcoin to an exchange? This is the Lightning Network. So I asked you guys earlier, what is the Lightning Network? What it is Bitcoin's actually really slow. It does I think it's it's between 4 and 6 transactions per second. It's really, really slow. Okay. Meanwhile, Solana does 50,000 transactions per second, right? And what the Bitcoin Lightning Network allows it to do is to scale. So this is how Bitcoin is being used in other countries, such as El Salvador. Okay, there's running Bitcoin on the Lightning Network. You can literally go into a coffee shop in El Salvador and buy a coffee with Bitcoin right now because of the Lightning Network. And you can just literally go on YouTube and watch it. It happens in a fraction of a second. So you can see the exponential growth that's been happening right now. And on Twitter, they released some payments method on Twitter where you can send just money, kind of like Venmo, through Twitter. And what they do is they actually, so let's say you're sending US dollars to someone in Mexico and you're trying to give them a peso. What is actually done is the US dollar, they use it to go buy Bitcoin. It's run through the Lightning Network, and then it converts it to the peso, and it gives that person the peso. So that through Twitter, which Jack Dorsey is obviously a huge Bitcoin bull, they're running the entire network through the Bitcoin Lightning Network, and they're settling everything in Bitcoin and back into the original fiat currency. This is already being used on Twitter, obviously. This is the supply. So this is the illiquid supply. I kind of showed this right earlier where a lot of Bitcoin's moving off of exchanges. Well, what happens is it creates something called illiquid supply, which means that the supply of Bitcoin that's illiquid, that cannot be sold, right, is increasing. And now we're starting to see that at an all-time high. You see the orange line just steadily going up and to the right because people are moving Bitcoin to places where it cannot be sold. And then this is something we love to analyze is the long-term holder net position change. So you can actually analyze, and this is because blockchain technology is transparent. The only reason why we have this analytics, I can see where I bought Bitcoin back in 2013 and who I sent it to in 13. You can analyze you can just go to blockchain.com, literally copy and paste your Bitcoin wallet in there. It'll share with you how many transactions, how much money is in the wallet, how much has been sent into it, how much is sent out of it. Right on this, what we're looking at, long-term holders are people that hold Bitcoin over 155 days. So we can see the length of the time that people are actually holding Bitcoin, and this pulls together long-term holders. What you can notice is they're actually really, really good at timing the market, right? When we have this blow off top in 2011, you see red here, that means they're decreasing their position in Bitcoin. Then you see the blow off top again in 13 and subsequently in 14. You see more red there. And then 17, they were selling all the way through 17 from about, I think it was $2,000 all the way up to 20K. And then you can see in the bear markets, they start to accumulate, right? Shown in the green. And now they're starting to sell again, which generally means you have about 6 months on average when you're starting to near the end of a bull market, which bull markets are usually 3 years. It's a 4-year cycle. So it's usually 3 years of a bull market, 1 year of a bear market. So you can see some red starting to happen now because we just hit all-time highs in October, and we're starting to see long-term holders actually take profit. This is another one that's fun to analyze, which is just what short-term holders are doing. So what is the dumb money doing, right? You can see that they increase their supply at the absolute worst time. When the price goes up, they increase their supply to the max amount, and then when the price goes down, they start to sell off because they're dumb, right? So we want to look at what the dumb money is doing and do the opposite of what they are doing. And this is the type of metrics only possible from blockchain technology. And this is also the long-term holder net unrealized profit and loss. So when you're in the blue here, there's extreme euphoria and greed, which means that long-term holders have been holding Bitcoin to the point where 90% of them are in a net unrealized profit, which means they have not locked their profit in by selling Bitcoin yet. So we have indicators like on this, when this metric goes to a 0.94, 94% of them, the long-term holders, are in a net unrealized profit, we know that we have about 2 to 4 weeks until we see likely a top, because that's what's happened in the history of Bitcoin. Right, so this is another metric we really love. And now I want to talk just briefly about altcoins, because there's a bunch of garbage, and unfortunately, people end up losing money in crypto because there's now like almost 15,000 coins. There's probably even more than that. That's just listed on something called coinmarketcap.com. And the majority of them have no utility and no value, and they're a complete waste. And what we like to invest in, if you look in the top, you guys can all use this for free too. This is called Masari.io. And this is just a research tool that we use. And we like to invest in smart contracts, right? So what a smart contract primarily is, it has its own blockchain, right? And it gives it real value because every transaction on the blockchain uses its native coin for the fee. That's why the coin has value, because all the data and all the transactions being run through the blockchain, every transaction, it uses the native coin for that. It's called a gas fee. Who has used Uniswap with Ethereum gas fees? Yeah, there's like $300 right now, okay? And you're paying that in ETH because Ethereum has its own blockchain. And that's what all of these do. So like, we love to look at these, look at the data behind these blockchains to be able to understand, is the blockchain scaling? Is it in a good sector? Is it actually going to be used? Maybe it's used in the logistics industry like VeChain is. Right? We want to look at certain blockchains that have real value and then analyze the analytics behind them and say, oh, is there a lot of NFTs being minted on the chain? Is there 10,000 transactions a day, or is there 4 million transactions a day? And that's what we looked at, right? This is why we dumped Cardano about a month and a half ago, because finally, after 5 years, they launched smart contracts. And then what we looked at is, oh, well, this is on blockchair.com. You can see the 24-hour statistics. They've only done 132,000 transactions, okay? And this is like the third largest coin. It had like $78 billion in it. And we're like, wait, why does this have $78 billion in it? They have zero traction. And then we look at another blockchain called Harmony. Okay, this was, I don't know, probably number 76 on the market cap. It had like 2 billion in it when Cardano had 78 billion. But Harmony, if you look, first of all, the wallets have been significantly exponentially growing. But down here, this says 3.1 million transactions. So they're consistently doing over 3 million transactions per day, which gives that coin, which is called One, more value because every time there's a transaction, it uses the native coin for the fee, right? So we dumped Cardano and bought Harmony, and that was a very good buy. The price went up about a 3x after doing that, right? And those are the types of analytics we like to analyze before taking positions, because we like to invest in fundamentals first, and then we'll manage more on a technical level. And this is another cool thing you can see. Dogecoin, what we're looking at is the largest wallets with Dogecoin. If you look at the very top, 30 billion. Then we got 5 billion Doge, 5 billion Doge, 4 billion Doge. About 5 wallets of Dogecoin hold just under 40% of the supply of Dogecoin. And that's a really big risk. We don't want to allow any type of one wallet to just dump the coin, and that would dramatically impact price. So this is another thing that you can easily analyze is like, who are the biggest wallet holders? And you can look up all these addresses. So you can literally click into these addresses and see how they're transacting. Are they selling Doge? Are they buying more Doge? Or we want to be able to know what the largest wallets are doing and the largest holders are doing before actually taking positions. This is another software we like to use. What these blockchains allow you to do is they allow they're called dApps. So developers will come onto the blockchain and actually build application on the blockchain. That application could do an infinite amount of things. There's so many things that can be built on and ran through a blockchain. So what we look for is developer activity on blockchains, and that's also why we took a significant allocation in Solana, is that you can see the really big jump in developer activity. This is another statistic we look at, is how many dApps are actually being built on top of a blockchain, because that can give us an idea, because that'll help the transaction scale, and that'll allow the coin to become more valuable. I think that is it. I really wanted to open it up for any questions real quick, and then I'll let Eddie run the show. Does anyone have any questions on a blockchain? Like we were talking about ETH gas, right? Every transaction that you run through a blockchain, there's some type of fee involved. And what happens is each blockchain has its own native coin. So the fee is paid for in that coin. So the more transactions that are being run through a blockchain, the more the coin has real utility. And that's what we like to look for. And also, like, does it have utility? Is it disinflationary? Is it deflationary? Like BNB is highly deflationary. Ethereum just switched to being deflationary. So now it's actually burning the supply, so the supply is actually decreasing. Developer activity is important because once developers build on top of it, that's what he's talking about, is the ecosystem. It starts to expand because now we have all these different dApps that are built on top of it, and all those have transactions. So it just creates this huge network effect. But like, the total amount of transactions on Harmony is like 300 million. Cardano has a total of like a couple million, and Solana has 36 billion. So it's like you can look at data like that. So yeah, Cardano's at 22 million transactions. Harmony's at 324 million, but like Solana's at 36 billion. So those are like it can scale very, very quickly. Ethereum is just a form of a smart contract, right? So you let's say you want to go into real estate, and you can put an entire real estate transaction on the blockchain instead of using a title company. So you can literally build an application on top of Ethereum and be running all of your transactions in real estate through the blockchain, and then each transaction is paid for through ETH. But the sky is literally the limit. That's why blockchain is going to engulf the entire world. But it's you as a company or developer can build any type of an application and run it on top of a blockchain, so you can remove a central power. It makes it more efficient. It's much more scalable, and you're also in control, and there's complete transparency. So instead of taking a month to close a property, it could take 28 seconds, right? And like another example is like, let's say you're a bookie, right? And you want to take this to be legitimate, and we're betting that Ohio State and Michigan are playing a game, right? And we're betting that Ohio State is going to win. And we both put 100K on the game. Well, right when Ohio State wins, I am automatically sent through the smart contract the 100K from the loser and my money. So we entered into a smart contract on the blockchain, and that'll happen automatically with no bookie that's taking a fee. That's just another, like, there's an infinite amount of ways to use blockchain. Yeah, it's pretty ridiculous. What it is a client acquisition strategy. So what we've been told from a few platforms is like anything that they're paying over about 4%, like specifically in Bitcoin, they're actually taking a loss, but they're able to bring more assets to the platform, which they monetize assets in many different ways. Because like they have, for example, on Voyager, they make a ton of money through their exchange. And they do so in multiple ways. And then a lot of lending platforms, they'll pay you just below the rate that they're getting from people taking loans. So it goes both, they're earning 12%, they're paying you 10%. The thing we like about Voyager is we can audit their financials. That's something that you usually cannot do with a lot of lending platforms because they're not public companies. So that does give us more confidence behind the platform. But I mean, yeah, we hold USDC and are paid heavily to hold our cash. We get paid 10% to hold our cash position. Yeah, I think it's going to be a huge battle for the next at least 5 years. I think it's going to be a really, really big deal, but we stay away from the things that are going to be regulated very, very heavily. Certain places within DeFi are going to be regulated very heavily. Certain privacy coins, we stay away from privacy coins because that's ways that people can avoid tax and other things. So we stay away from certain sectors that we know are going to be heavily regulated, but the entire regulatory system is so dated. They're trying to mold crypto into old regulatory laws that were created 100 years ago. And what they need to do is they need to sit down, which they just did, I think it was yesterday, and they talked to the greatest minds within crypto. They're trying to understand the space because you can go into a zillion different black holes within crypto. And what they need to do is create digital asset laws that's going to bring clarity to everyone. But that's going to take time. So we think the next 5 years is going to be kind of a crazy battle. So the more miners that go onto a network, that does not increase the amount of supply that's released for Bitcoin. It just becomes more difficult for people to get the reward in Bitcoin. So we know for a fact that there's 900 Bitcoin released per day. And we know in about 3 years, that's going to get cut in half to 450 Bitcoin released today. But to answer your question, we believe, just based on the stock to flow and many other metrics, that the price of Bitcoin is going to continue to rise because it's been up 230% since it came out. Whether you like it or not, every single year, on average, it's had a 230% return. So as the price continues to go up, they're going to, yes, they may get rewarded in less Bitcoin, but we believe it's still likely to be profitable. I think it's going to be a law of diminishing returns on it. So I don't know when that date is, but yeah, it just depends on the growth of the mining community. But it's definitely growing. In the United States, it's massive growth now because China just banned it, which is great. Brought pretty much all the miners over to the U.S. So now it's like somewhat centralized in the U.S., which I think is a huge advantage. But yeah, I think there's going to be a law of diminishing returns with it. And I don't know the date on when that's going to happen, though. So everyone's just kind of looking at like a JPEG NFT. This is just the start of NFTs. They're putting NFTs on the dumbest things that people don't even, like a rock, like a JPEG rock. I don't even know what it sold for, like millions of dollars. And it was like, no one could even comprehend it. But that's just the start of NFTs. I could put an NFT on this microphone in this entire building, and we can all fractionally own this entire building and this microphone. Like, that's what's going to happen. There's going to be 1 million NFTs put on this building, and 1 million people could own fractional ownership, and the NOI of the property, the net operating income, can run through the smart contract on the blockchain and pay out each NFT holder their proportion of the income of the NOI of the property. So like that is just going to start happening. That's what I'm talking about when I say everything is going to be tokenized. That's what I'm saying is like it's going to consistently grow, but during the bear market, whenever that does happen, we think NFTs are going to get crushed because they're completely illiquid, right? It's not no one wants to buy a hamster smoking a cigarette on a rock when it feels like the world is melting, right? So we think it's going to be a really rude awakening into the bear market, but after we think it's going to just scale tremendously. I mean, the majority of crypto is garbage and it's completely useless. But once you start to understand like analytics and where the world is going, you can start to have a fundamental understanding of what could potentially have value.
All right, everybody give it up for Jeff Sekinger, please.